Michael Saylor is not investing in Bitcoin. Michael Saylor is making a bet. Michael Saylor is hoarding cash on his company's balance sheet in the form of Bitcoin, expecting it to be worth more dollars. That's it. He may be wrong about that bet in the end. He may be betting on $2 million Bitcoin. It may only get to $250,000. I think Bitcoin's got plenty of room to run, but these guys are talking like, oh, we're going to take over the entire freaking world, like with Bitcoin. Like, no, I got news for you. There's something called XRP, and I really do think XRP is going to come in and steal a lot of that thunder, because XRP actually provides a service as liquidity for real markets.
Tom Luongo is a financial analyst best known for his Gold, Goats and Guns newsletter, where he connects financial markets. His recent outlook comes at a time when Bitcoin has crossed the 109,000 USDT mark, currently trading at 109,010.74 USDT with a modest 0.38% 24-hour increase, according to Binance Market Data. He highlights a scenario where the Federal Reserve and U.S. Treasury revalue gold and bring it back onto the Fed's balance sheet at market levels. This move could dramatically change leverage ratios, shifting them from unsustainable levels toward far more stable territory. In this framework, both gold and Bitcoin could act as collateral that strengthens the financial system while incentivizing American banks and investors to hold treasuries under a free banking model. However, challenges remain when considering crypto's role alongside traditional money. While digital assets may appear as close substitutes to fiat currency, they still lack critical functions of money, such as reliable stability and institutional backing, that make fiat resilient. Establishing regulatory structures for crypto markets has proven difficult, leaving them vulnerable to volatility and systemic shocks. This fragility underscores the risks of deeper integration between traditional finance and crypto, as volatility in digital assets can ripple through broader markets. The trajectory of the dollar, alongside the evolving roles of gold and crypto, will ultimately shape the future of global finance. Before we dive into Tom Luongo's perspective on Bitcoin and their impact on the global financial system, make sure to like this video, subscribe to the channel, and hit the bell icon so you stay updated with every new insight.
Am I invested in a depreciating shitcoin? Maybe.
Yeah.
We'll see what happens. The next 5 years are going to determine whether or not the purchasing power of the dollar for the first time in a long time starts to rise as opposed to fall. And when you are in that environment, what do you think the price of Bitcoin is going to do? Is it going to rise?
You would think.
Only if it's the thing causing the dollar to rise in value by being the collateral underneath the dollar.
Mm-hmm.
So what do I think for gold and silver? I think silver is a different story completely. Gold, let's run some math. Let's assume that the Federal Reserve, the one act that's going through the Congress right now has the provision in it that the Treasury is going to remit and then re-emit IOUs or receipts, to the Federal Reserve for the gold. They're going to revalue it and they're going to put it back on the Fed's balance sheet. Here's the fun part. Everybody's been like, there ain't no gold in Fort Knox, dude. It's not there. They sold it all off. They gave it all. No, they didn't. It's all there. Moreover, what happens if we've all talked for years like that China has more gold than they actually can lay claim to more gold than on their balance sheet. They've all said the same thing about the Russians. Russians probably have 5,000 tons more gold than the Bank of Russia has officially in its reserve. Maybe that's 10. I don't know. It's some number. Chinese probably have a lot more. Why do we believe the United States doesn't again? What if we were to find out that not only does the United States have its 8,133.5 tons of gold that's on the Fed's balance sheet, currently held at $42.22 an ounce, for a whopping accounting value on the Fed's balance sheet of $11.04 billion, as opposed to what if the United States actually has something like 11,000 tons? It issues the receipts, but in order to consolidate the federal balance sheet, you got to call in the gold from the Fed, revalue it, and then send it back to the Fed. Now, all of a sudden, the Fed's $6.2 trillion balance sheet has $900 billion worth of gold reserves in it. Now the Fed is only 7 to 1 leveraged, not 60 to 1 in accounting terms. 7. That's at $3,400 an ounce. And the Treasury admits that it's got a couple of thousand tons of gold. So it's got a few $100 billion in gold. Oh, that changes the calculus about what's. Now let's move the price of gold to $5,000. At $5,000, the gold on the Fed's balance sheet is worth 20% of the Fed's balance sheet at current size of the balance sheet, or or a 5 to 1 leverage ratio. Now, let's talk about a 5 to 1 leverage ratio, shall we? That seems reasonable. Maybe it needs to go down to 2. Well, okay, fine. Then gold's $12,000 an ounce. Now we're at a 2-to-1 ratio, and we've added more money to the balance, and we back more Treasury. If the Treasury has a couple extra 1,000 tons of gold just laying around, just saying, the way you get out of this, it's all accounting. You grow the asset side of the balance sheet. You can grow gold in terms of price, Bitcoin even as well. You grow them into a market that allows you to then expand the volume of dollars running around, but or you back the same number of dollars with a higher percentage of gold and or Bitcoin, and obviously UST bills at the same time. But the free banking model is actually incentivizing Americans and American banks to hold Treasury bill as opposed to everybody else.
Tom Luongo stresses that while Bitcoin outshines other shitcoins, it still faces the powerful network effects of entrenched financial systems, which remain far larger and more established. These incumbents now recognize Bitcoin's disruptive potential and are even seeking ways to leverage its network for their own benefit. He cautions against assuming Bitcoin's dominance is inevitable, pointing out that another proof-of-work blockchain with stronger attributes could emerge as competition. For him, the story of Bitcoin is not a finished one. It is a continuous contest of innovation, resilience, and adaptation within an ever-changing financial landscape. At the same time, Bitcoin's short-term price swings and investor hype matter less than the long-term development of blockchain technology itself. A recent Chainalysis report highlights that adoption is strongest in Central and Southern Asia and Oceania, where grassroots use is growing rapidly, while higher-income countries are showing renewed interest thanks to regulatory approval of Bitcoin investment products in the U.S. This combination of grassroots adoption in emerging markets and institutional acceptance in developed economies signals that Bitcoin is gaining traction on both ends of the spectrum. The broader trend suggests that while challenges remain, Bitcoin's role as both an asset and a technological foundation is expanding, positioning it as a critical player in the evolving global financial system. Let's get back to the interview.
I'm specifically telling you that the same reason that Bitcoiners say that Bitcoin beats all other shitcoin is why the existing systems can beat Bitcoin. The two words that every Bitcoiner loves more than anything else: network effects. Mm-hmm. It's that simple. Yep. They have networks, dude, and their networks are bigger than Bitcoin.
Right. And to your point,
and they see the threat now. Now they're trying to figure out how they can use Bitcoin's network to their advantage. Why do you think you're going to win? Why do you think you're going to beat them?
It's the big test going forward, like you said. Yeah.
Or 100%. Why do you think you're going to beat them in the next 3 years or 5 years or whatever? Why do you think that? Bitcoin may win in 30 years if it's still running. And if Bitcoin does win in that disruptive, crazy time frame, 3 years, 5 years, 3 years, for example, why do you think that some other proof of work blockchain that has better attributes than Bitcoin can't be broken down as well? If Bitcoin can overcome the traditional systems' attempts at holding on to power, why do you think there's not another competitor out there that the market isn't willing to choose later on? Never, ever, ever, ever think that you have the end of technology. Don't ever think that the game ends or the story ends, because the story never ends. It's a constant fight. Okay, that's the way the world works. So.
Yeah, it's funny. It's funny you say that, Tom.
I've met and argued with an awful lot of arrogant Bitcoiners over the years. I have.
Yeah, and I think it's righteous indignation.
I've been in this shit since 2010. Yeah. I've argued every angle on this. I've argued every angle that proof of work is an ultimate centralizing tool. I've heard it all. I mean, listen to it. Going, all those theories sound nice because you live in your head. Wait until somebody decides to not fight fair. Well, you can't fight fair against math. Okay. Keep telling yourself that. If logic ruled the day, we wouldn't have civilization. Because this is a very important point. I want to end the podcast on this. I don't care. Yeah. You save the question for next time. It's very important. Logic doesn't build civilizations. Emotion and endocrine systems build civilizations. Blood builds civilizations. Sweat builds civilizations. Need builds civilizations. Nothing more. We are not machines that poop. We are emotional creatures, barely understand ourselves, no less, and our own reactions to things, no less to everybody else's. You may be able to prove I have the perfect money. That's nice. And you'll be capable of building a fourth-rate book club with third-rate historians. And you'll get 1% of the vote. welcome to being a libertarian. You can understand that at the end of the day, all that matters is blood. Now, we use these systems of trade to minimize the application of blood. Too many, I keep saying it, too many spurgs, not enough jocks. You got to get jocks into Bitcoin who understand how to fight.
The discussion on Bitcoin closes with a reminder that its journey is far from over. It is not a guaranteed victory but a test of endurance against powerful financial systems and the constant evolution of technology. Its resilience and rising global adoption, from grassroots use in emerging markets to growing institutional recognition in developed economies, showcase both its strength and its potential. Yet the real challenge lies in maintaining that momentum while facing entrenched networks and possible new challengers. Bitcoin is not a finished story but a proving ground, an evolving force that must adapt, innovate, and continually demonstrate its relevance. Its future will be measured not only by price, but by its ability to reshape trust, collateral, and sovereignty within the global financial system. Where do you see Bitcoin heading in the next 5 years? Will it cement itself as a global financial backbone or face new challenges from emerging competitors? So stay tuned. If you found this discussion valuable, don't forget to like the video, subscribe to the channel, and hit the bell icon so you never miss an update. Thanks for watching, and let's see together how the next chapter of Bitcoin's story unfolds.